Hello, welcome to my YouTube channel, Dear Traders. My name is Emeka, and the purpose of my YouTube channel is to provide free training and mentorship to struggling and new traders all over the world. From my previous videos, I've provided very useful materials and contents that talks about supply and demand zones, smart money trading, institutional bankers trading, and strategies. So keep on supporting my YouTube channel. Subscribe. If you have not subscribed to this channel, subscribe to the channel, because more useful contents are going to keep coming. I'm going to be providing you with content that will help your trading and improve your trading. Just like my videos, share it with your friends so that more traders can be able to benefit from this free useful contents. Subscribe to my channel. Also, I have dropped the link to my free Telegram group in the description box. Please do well to join our free Telegram group. There I share free setups and signals which you can trade for free and make money. All right, so please follow me. Today I want to talk about how to use trend lines for your trading, how to trade with trend lines profitably. You know, trend lines in themselves is not actually bad. Trend line is good to use while trading, but when you use it with other concepts like demand and supply concepts, smart money, institutional concepts, you'll be able to see better success. Some people use trend lines, some traders use trend lines just like that alone, but when you use it with smart money and other concepts, smart money, institutional trading concepts, you will be able to see better success. All right, so what are trend lines? Trend lines are actually a line that connects two or more points of price reversal in a market. All right, that is what a trend line is, and they are imaginary line that connects two or more points, either two peaks or two or more peaks or two or more lows in the market in your chart. All right, so when price comes to, in the general belief in the industry by among trend line users is that when price comes to a trend line, it would either reverse or break the trend line. All right, so you have trend line reversal traders and also trend line breakout traders. All right, trading, being a reversal or a breakout trader, nothing is wrong with those, but if you combine it with price action, demand and supply concepts, institutional concepts, then you can have better success, because a trend line in themselves do not necessarily reverse price. All right, a trend line does not necessarily reverse price or cause price to, does not affect price behavior. All it's just to give you just a tool. I just believe that trend line is a tool that can help that you can combine with other better strategies like the institutional strategies and the smart money and demand and supply strategies. All right, but if you use it exclusively without using price action strategies, then you might not see the required success. All right, so we have two types of trend lines. We have the upward trend lines and the downward trend lines. All right, so like I said, I'm going to be showing you upward trend lines, downward trend lines, how to draw them. Also, we have inner trend lines and outward trend lines. All right, inner trend lines and outward trend line. Now, trend lines, as I said, you connect two or more points, two or more highs or lows. Now you see here, now to draw an upward trend line, you see you can see a low here, another low here, another low here, okay, another low here, another low. These are all lows that can possibly be connected together, right? So when you connect 2 points, 2 lows by a line, you have an upward trend line. See now, I'm able to connect these 2 lows. All right, I'm able to connect these 2 lows. You see the lows. There is a low here. There is a low here. There is a low here too. Okay. There is another low here. So I have been able to draw my upward trend line. Why is it an upward trend line? Because it's an upward trend line because the price is in an uptrend. You see, the price is an uptrend. The price is in an uptrend. See, this is 1 point. These are lows, significant lows. You draw an upward trend line by connecting two significant lows. This is the first significant low, second significant low, and now the expectation is that when price comes to the third significant low, it's going to buy in an upward trend line. All right. Now these are also lows, but they are insignificant. These are lows too. These are lows. All these ones here, these are lows, but they are insignificant. So the significant or obvious lows are number 1, number 2. So we don't trade this low. You don't trade this low. First, you need 2 points to have a trend line, a valid trend line. 2 points. You must get 2 points. We have this first point, second point. Now, this third point is where you should look for your buys. If you are to buy, this third point is where you should look for your buys. So these are upward trend lines. These, you ignore the insignificant lows. Only go for the significant lows. Connect the first one, the second one. Now you look for a buy or a buy from the third one. All right. Sometimes you can also look for a buy from the fourth one too. You see, price also came to this fourth point. Price also came to the fourth point and also bought as well. All right. Also, there's also a buy also. Now, how this is an upward trend lines. All right. Now, let's draw a downward trend line. A downward trend line is drawn. An upward trend line is drawn from the left to the right. All right, from the left to the right, as you can see in this trend line currently. All right. So, but a downward trend line is drawn from the right to the left. Connect 2 points. Let's connect some points. Connect two significant highs. This is a high. All right. This will also be another high. All right. We have connected 2 highs. Now we can now draw our trend line. You see, we've connected. These are 2 lines, two highs. So I'm drawing the downward trend line from the left to the right. All right, while an upward trend line is drawn from the left to the right. Okay, upward trend line drawn from the left to the right. Now you see, price, we have identified two highs, or called 2 peaks. 2 peaks in price. Now this is the first peak, second peak. So the expectation is that when price comes to the third point, we can have a trade, a sell trade. Okay, we have identified 2 highs. So when price came to the third point, there was a sell. Now, or sometimes too, price might also come to the fourth time to test the trend line, and you also have a sell like you see. Let me draw it well. In this case too, price came the fourth time and there was a sell. All right, price came. We don't sell on the first or second touch. You need 2 touch to validate a trend line. This is the first touch, second touch. So to validate a trend line, so this trend line is now valid when we have 2 touches. Now trading will now occur from the third and fourth touch. The higher probability is from the third touch. All right, third touch is the highest probability. Okay, third touch is the highest probability. All right, but as I said, trend line is just an imaginary line. It's not compulsory that price has to reverse from a trend line. It's just an imaginary line. All right, so trading, basing your trade just exclusively, basing your trade decision exclusively just because of a trend line is not the best way to trade. Okay, except you combine this trade line with some form of price action or smart money trading or demand and supply trading. For example, we can see that price came, this is the first touch, second touch, came to this third touch. Now I don't have to, most traders would place a buy from here, but for me, our smart money traders, we only trade this third touch if there is a corresponding demand or supply. As you can see now, there is a demand, there's a supply here. This is a supply zone. All right, there's a supply zone here. So this, to me, what caused this third sell is actually because of the supply zone here, not this trend line. Trend lines in themselves are not what causes price sell or price buy. All right, drop or rise in price, not actually the trend line. Trend line is not, it's just an imaginary line. Trend line does not cause a sell or a buy. All right, and to all smart money traders, what causes the sell or a buy is this supply zone here. Price reacted to the supply zone here and sold. All right, price reacted to the supply zone and sold. In this case now, first touch, second touch, price actually reacted to the demand zone here and bought, not the trend line. Here in it, look at the demand. Let's mark the demand zone. This is the demand zone. It's just a tap on it. Okay, just a tap. If you were to view this on a higher time frame, you see this is, if you were to view this on a D1, a daily time frame, this is a tap on a demand zone. This is what actually caused this demand zone is what actually caused this buy, not the trend line. That is what most trend line traders do not understand. That is what they do not understand. Trend lines are not sufficient to cause price movement. It is the zone, demand and supply is what causes price movement in the market, not trend lines. But you can use trend lines as a confluence, additional confluence to your trading. All right, in this case now, you see this demand zone actually cost the buy and not the trend line. But trend lines can be used as additional confluence to your trading decision. All right, so we've seen the two types of trend line and how to draw your trend lines. Now, the mistake, what's the mistake some traders make in drawing trend lines? You don't force the lines. You only identify significant points that is obvious to every trader. Significant points. If the lines do not touch the 2 points, your first 2 points, do not force it. Okay, do not force it. And I draw my trend lines at the week. At the week. Don't let your trend line to enter into the candlestick. Draw it at the week. There could be slight interception, but it should be at the week. All right. Now there are two types of trend lines. We have we have identified the upward trend lines and the downward trend lines. Now, trend lines are also further classified on the basis of outward trend lines and inner trend lines. Now you see there is also a trend line here. These are inner trend lines. These trend lines are actually obvious in lower time frame. Okay, they are obvious in a lower time frame. This is a trend line. First touch, second touch, okay, and third touch. All right, third touch. These are inner trend lines. They are more obvious in a lower time frame. Okay, there's also another inner trend line here. This is also a trend line. All right, first touch here, second touch here, and price bought at the third touch. All right, here. But as I said, it is actually the demand zone here that caused your buy. This demand zone caused your buy and not the trend line. But trend lines can be some form of confluence to your buy decision. So now when you are faced with inner trend lines and outward trend lines, the outward trend lines should take preference, because the outward trend lines are actually trend lines that are more significant and they are higher time frame trend lines. They are called higher time frame trend lines, and they are more significant. Those are outward trend line. This is an outward trend line. This is an outward trend line. This is an outward trend line. These are inner trend lines. These are inner trend lines which are obvious in lower time frame. All right, see another trend line here. I can see another one here. Okay, this is another trend line here, right here. All right, this is the first touch. This is the second touch. All right, so this is another trend line here. So you see inner trend lines and outward trend lines, but you should first identify your outward trend lines, which are the higher time frame trend lines, before you identify your inner trend lines. All right, you should first identify your outward trend lines before you identify your inner trend lines, and do not let the candlesticks to intercept like this. If you were to draw this trend line now, don't force your trend line. See, now this is a wrong way to draw a trend line. All right, because these candlesticks have intersected your trend lines. You draw it at the wick of the candle, all right, or else you're going to draw it wrongly and you will not have the higher probability trade you're looking for. So what have we said so far? We have said that trend lines are good to use, but when used only with price action, demand and supply principles, smart money concepts, institutional trading concepts. All right, and we have said that trend lines in themselves do not cause price reversals. What cause price reversals are the demand and supply principles and concepts. All right, now how do you use trend lines? How do you use trend lines in your trading as a smart money trader or a demand and supply trader? As I said before, two things can cause price movement. When the price comes to a trend line, an imaginary trend line, price can either reverse or break the trend lines. And we have two types of trend line traders: reversal trend line traders who wait for the third touch or fourth touch to get into a buy or a sell trade, or we also have trend line breakout traders. They wait for a trend line to be broken, and when price breaks the trend line, they look for a retest and they get into a buy or a sell, as the case might be. All right, so those are the two types of trend line traders. Now let's look at each case. We have discussed the trend line reversal trading here. Let me remove all of these. Let me decongest the chart. All right, now you see this is the first touch, second touch, and the third touch. So this is a typical trend line reversal trader would look for a buy trade here. Okay, and a typical trend line reversal trader will look for a sell trade. When you're after the first and second touch here, they will look for a sell trade at this point, right? These are a trend line reversal trader. Now let us look for how a trend line breakout trader would approach the market. Now in this case, now you see I've marked this for to make things a little bit faster, medium faster. See, now this is a typical trend line. Let's see it clearly more on a 15 or 30 minutes time frame. All right, in this case now you see we have a trend line here. I'm in a trade currently on this odd USD. We have a trend line here. These are upward trend lines, a channel. All right, now a trend line breakout trader would approach this market, will sell from here. There's this trend line that have been tested 1, 2 and 3 times, a third time, and now there's a breakout from here. So a trend line trader will be looking for a breakout and a retest, and now a sell-off right from here. This is a trend line breakout trading. You see how the market dropped after the break of this trend line. All right, but then we'll actually learn more about this trading. You see, there's a breakout. The price broke out of this channel, okay, ascending channel. Price broke out, and now there's a drop in price. There's a drop and there was a sell. All right, let's look for another example. This is a better example. In this case now, there is no retest. Okay, there is no retest. So what most traders will do, they would wait for a retest of this. They wait for a retest of this trend line, and then before a sell-off. So but there was no retest here. There was no retest, but then I believe that the retest was actually here. Retest not of the trend line, but a retest of, okay, the retest of this zone. This is a supply zone. So what actually caused this drop here now was this supply zone here. That is what actually caused the sell-off. All right, price broke the trend line and tested this supply zone, and then reacted to it, and now there was a sell. All right, now let's look for another example. This is a wonderful example. I love this example so much. You see, this is an ascending channel, okay, and now is an ascending channel. Later I'll do a video about chart patterns. I'm not a chart pattern trader, but sometimes you need to know the retail trading ideas, so that which you can now so you can know how the retailers are thinking. And now as a smart money trader, you now use your smart money and institutional trading ideas to concepts to have a better trading decisions. You need to know how the retailers are thinking. This is a retail trading, so that we now know how better, as a smart money or demand and supply trader, you now know how to approach the market as in a more superior way. So you need to have both the institutional and the smart and the retail trading ideas. You need to know both. All right, I'll do another video later on chart patterns. Right, so for today I'm actually combining the channel chart pattern with the trend lines, and also the demand and supply zone. Now you see, in this case, this is a beautiful case. In this case, we see a channel. The price was in a channel. All right, price was actually moving in a channel. All right, the first touch of the trend line, second touch of, okay, yeah, first touch, second touch, third touch, there was a sell. And now, instead of having a reversal, a buy reversal on this third touch, price broke the trend line, and there was a retest of the trend line, as some retailers will say. But this is not actually a retest of the trend line. This is actually price reacting to a supply zone. This supply zone right here, price reacted to this supply zone. Price reacted to the supply zone, and there was a sell-off. All right, price reacted to the supply zone here, and there was a sell-off. That is what actually happened in this case. All right, do you understand? This is not a retest of the trend line. It's actually a reaction to the supply zone right here, and this is what caused a sell. So if you understand this, I understand both. I know how the retailers think, and I also have the idea of smart money trading. Okay, so when you have the idea of both, you make a more superior decision. All right, now later we're also going to discuss many vital topics. We'll discuss about mitigation. We'll also discuss about I'll do other videos about about liquidity. So you need to know how the retailers are thinking so that you can also know how the smart money traders approach the market to victimize and to outclass the retail traders. Now I'm currently in a trade on, as you can see, I'm in a trade. I entered yesterday. Yesterday. You see, I'm in this trade. I dropped this signal. On my free Telegram group. You see, we are about how many pips so far I've made so far. I've made about 135 pips so far I've made on this trade. You see, how did I get into this trade? This is a downward channel. All right, downward channel. This is a trend line. The price was moving in a channel, and then there was a breakout from this channel, and now there's a price. There was price reaction to the supply zone, to the demand zone right here. I entered this trade from when price reacted to the demand zone, and I saw some buy entry confirmations. I dropped this signal in my free Telegram group. So if you're not in my free Telegram group, you are missing out. You see how price respected the demand zone and now bought. So it's not actually a trend line, but the demand zone right here that price respected, and you see it bought. And this is my final TP. Okay, this is a high risk to reward trade. You see, this is a high risk to reward trade. All right, you see, this is a high risk to reward trade. There are other things I look out for here. There are other things I look out for here. So if you need to know more, there are more secrets which I give to my private mentorship students. All right, please contact me. You can see my contact in my free Telegram group at Trading with Emeka. All right, at Trade with Emeka. That is my private contact. Contact me. I will mentor you one on one. All right, I will mentor you one on one privately at your own pace, and you learn better. Although with the free YouTube videos, you can get a lot of concepts, a lot of free training. But then when you subscribe to my private mentorship, I'll still monitor your progress. I'll monitor your growth and progress in the market. I will correct you if you are wrong, and I also give you more advanced concepts and more advanced ideas that will further improve your trading. So this is our trade. Currently, this trade is running at a 135 pips profit. I gave this trade idea in our free Telegram group. The link to the free Telegram group is in the description box of this video. All right, please join. We are currently at break even. Sorry, not at broken. The trade is running risk free, and we have banked 135 pips so far. So please, this is how to use trend line, how to combine trend lines with demand and supply trading. This is priceless, but I'm giving you all for free. It's priceless. How do you support me? Subscribe to this channel, like the videos, give your comments in the comment box, and you can support me in any other way. Share this video and like my videos. All right, join our free Telegram group. If you need more ideas, if you need private coaching from the basics of forex trading, if you need private training, you have been struggling and you have not yet to see success, and you want me to monitor your progress, you want me to give you more ideas, monitor your progress and development in the market, I will do that. Just contact me. Just a very small I charge a very minimal cost just for my time. All right, but if you still want to be learning exclusively for free, you can still continue viewing my YouTube channel contents, and you will grow. All right, thank you, and do have a blessed and wonderful day ahead. I'm signing out.